Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, October 6, 2010. During the first full trading week for the month of October, as well as the final quarter of 2010, it is heavy in terms of fundamentals and event risk. So far, in terms of central bank market action, we're seeing that the Bank of Japan as well as the RBA surprised the markets. On Tuesday, the Bank of Japan reduced its interest rate to come in between 0 and 0.1%. In addition to that, the Bank of Japan will be expanding its balance sheet by 5 trillion yen. At the same time, the Reserve Bank of Australia kept rates on hold amidst expectations for a rate hike. And on Thursday, the ECB and BOE will be announcing their interest rate decisions, and after the closing bell on Thursday, fourth quarter earnings season will begin in earnest. Now, in terms of fundamentals, on Thursday, Fitch Ratings cut Ireland's credit and said that the outlook is negative. Also, in terms of economic data releases out from the U.S. ahead of Friday's jobs report for the month of September, the ADP reported that private sector jobs were reduced by 39,000 in September. And Challenger, Gray & Christmas said the number of planned layoffs rose during the month of September. Overseas, in the Eurozone, German factory orders expanded with a sharp gain, rising by 20.3% in August from the upperly revised 18.4% in the prior month. This does add to strength seen in exports out from Germany, helping the recovery of the German economy. Now, in terms of the foreign exchange market, the US dollar is trading lower against the euro, pound, and the yen. Dollar yen did fall below the 83 level during Thursday's trading session, and euro dollar topped the 1.39 level. Now, the Aussie currency recovered prior session losses following the RBA rate decision to trade near a 2-year high. Now, one way to trade your views on US dollar's strength or weakness is to take a look at IC's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is our daily technical report for the major IC FX option pairs, let's start out by looking at the AUX, which is the US currency against the Australian dollar. Now, for that pair, it is under pressure. It is pushing below a strong support area, and the preference of trading central analysts is short positions below 109, with targets coming in at 102 and 100 in extension. For the BPX, the US currency against the British pound, that pair is also under pressure. Now, the preference of trading central analysts for that pair is short positions below the pivot of 65.50, with targets at 62.50 and 61 in extension. That pair does remain on the downside and is currently approaching its support. For the CDD, the US dollar against the Canadian currency, it is under pressure. The RSI has broken below a bullish trend line, and the preference of trading central analysts for the CDD is short positions below 105, with targets at 99.50 and 98 in extension. For the EUI, the US currency against the euro, it is under pressure. Now, the RSI does call for further decline, therefore the preference of trading central analysts for the EUI is short positions below 75, with targets coming in at 70.50 and 68.40 in extension. Moving on to the SFC, the US currency against the Swiss franc, it is under pressure. Now, the pair has broken below its previous low, and the preference of trading central analysts for the SFC is short positions below 102.50, with targets coming in at 96 and 94.25 in extension. Last but not least, for this segment, let's take a look at the YUK, the US dollar against the Japanese yen. Now, the downside does prevail for that pair, and it has struck against its declining trend line and therefore does remain under pressure. The preference of trading central analysts for the YUK short positions below the pivot of 87.50, with targets coming in at 82.40 and 79.30 in extension. Moving on to your trend opinion for the major IC FX option pairs. Last week, the US dollar did remain under pressure, and this trend is expected to continue for the coming weeks. Now, in terms of portfolio performance, it is unchanged from last week, and since its inception, which was in August of 2007, it is higher by 1,879.63%. Since the beginning of this year, January of 2010, the portfolio stands at 599.54%. Now, we do have one trade alert for you here, and it is to consider puts on the NZD. Now, that pair is reversing down from a lower boundary of a former bullish channel, which is acting as a strong resistance. And the NZD should face further weakness while the daily RSI is getting close to oversold territory. In terms of other pairs that trading center analysts are looking at this week, that does include the AUX PZO. And next week, trading center analysts will be paying close attention to the EUI as well as the CAD and the YUK. Now, they will be looking at the EUI because it should reach its target is its next support area, which comes in at 70.50. And in terms of the CAD, it is challenging the lower boundary of its trading range, which comes in around 101. Also, the downside breakout of this level could lead to a bearish acceleration. Last but not least, for the YUK, it is capped by a declining trend line and remains under pressure. That does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great week.